Guys, I'm sure you have heard about the Wyckoff theory, but have you ever used it? So I'll show you how you'll be using it to capture such moves as this one. So let's go direct to the chart. You see the market at this particular time, it was formless and dissolute. So how did I make this market make sense? I made the market make sense by drawing any pattern that I thought it was viable. But personally, I came and drew that trade line there, accompanied with another one beneath it there. You see now that formed the first phase of Wyckoff, which is called the accumulation. This is where the smart money enters. It goes hand in hand with the law of supply and demand, which states that prices vary due to the constant battle between supply and demand. Here there was constant conflict between supply and demand, so the market was there. This is where the smart money collect their orders to buy. So after we are done with the accumulation phase, we went directly to the markup phase. You see this move, that was the markup phase, which goes hand in hand with the law of cause and effect. The law of cause and effect is the second law of Wyckoff theory. You see, it states that any significant price change happens for a reason. So the reason for this change was the fact that demand had outweighed supply. Demand had outweighed supply. So that's why we went up. This phase is further accompanied by the fact that the amount of selling or buying before a price change determines how significant the change will be. You see, this amount of buying and selling during this phase, it determines how the trade will be. So this, when you map it up to that point, it has to be equidistant. So the moment I was here trying to capture the markdown phase, I was sure the bullish run was over because it had covered equidistance to this manipulation phase. So let's remove that. Okay, also let's remove this to get a better view of this. The next phase, which here stayed for about 12 hours, is the one that we call the distribution phase. This is where the smart money exits. They sell their position and they are like, yeah, we are done with the market, so they exit. And this is usually accompanied with the law of cause and effect. The law of cause and effect, according to Wyckoff, it compares trading volume and price. Trading volume and price. You see, like this candle was voluminous. It compares such candles and price. For instance, we can postulate that if both prices and volume rise, you can verify a strong uptrend. If both prices, you see the prices going up and volume increase, so the market might increase. But at this point, there was none of them. There was neither price nor volume. You can further try arguing according to Wyckoff that if price keep rising, volume drops, expect a turn. You see, if price keep moving up, you see here they were trying to move up, but by then the volume was reducing. The candles were becoming smaller and weaker, so we can expect a turn. Up to that point, I was convinced that we might have a turn because the volume was weakening. So what did I do? I narrowed down to my 1 hour time frame to look for an entry. At 1 hour time frame, I was just looking for a simple thing, that was a change of character and a confirmation. Let's play these candles and see how this magic happened. You see, up to there we had a change of character. Why? If you draw this market pattern like that, you notice that this market came and broke below this low, forming a change of character. You can mark it like that and eliminate this. So up to there I had a change of character, and now I was waiting for any further confirmation for entry. Let's play the candle. Up to that point we had a fair value gap and a reversing candle to retest the fair value gap. You see, that was the fair value gap. Let me remove this big one. Of course, you know we are currently in the distribution phase. Now let's focus here. You see there, up to that point the market dropped, changed character, went up to retest this fair value gap. I took my Fibonacci, confirmed that you are indeed in the optimal trading zone. You see, had hit the 50% mark, so I was sure here. If I get an entry, I'll sell it like crazy. So then after that I was looking for my exact entry. How did I capture my exact entry? Let's see. If you go to this M15 time frame and play out these candles, you'll notice that we had a very precise confirmation. Okay, up to there you can see this blue candle, this hanging man, that is a reversal candle. So I was just waiting for further engulfing bearish candle to confirm the sellers has kicked in for the final phase of Wyckoff, which is the markdown. Let's play these candles. The market manipulated their just psychological wall, and then all of a sudden you had this engulfing candle. So I was double sure that the bears had stepped in full force. So I pressed my sell there. I came by stop loss just above there, 5 pips. Yeah, I was double sure. You see, 100% sure. Yeah, I was like that. 5 pips stop loss and take profit of 15 pips. Yeah, as usual I do 1 is to 3. Furthermore, if you come to this M15 time frame, what added my confidence is that you'll notice the market was in this particular move. You see this particular channel there. You notice the market was traveling across that particular reversal symmetrical triangle. So let's remove this one for the break. You see, it had just done a breakout. Let me just be precise. No hurry, no hurry. It had just done a breakout from this symmetrical reversal triangle, and now it was coming back to retest, further retesting at this breakout and retesting at the fair value gap. Like, what I next are waiting for? Enter in full margin. At that point you can just play the candle, and within just some few minutes I was out with my good 1 is to 3. So that's a summary of Wyckoff. Wyckoff: accumulation, manipulation, accumulation, markup, distribution, and markdown. This was a markdown phase, and like that I was out. Till next time, bella ciao.